Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, morning.
Hi,
morning.
Good morning. Who would have thought that Sunday morning will get so exciting, right? Just wake up to all kinds of news, and I think the markets are still digesting the impact, bracing for impact, whichever way you want to call it.
Well, that's right. And, for the last few days, markets were speculating that something like this will take place. And that's what happened on Saturday night as well. So I think now the bad news is here. We'll have to deal with it.
I remember on Friday we were debating this point, right? That he's a deal maker. Nigel and I were saying that he's a deal man. He'll do a deal. He proves most people wrong. He was certainly proven wrong.
And that editor's the playbook, that program, it was actually
It was a good debate
before it happened. So lots to talk about. But I'll start with it's almost as if the dog which did not bark, right? I mean, to use that famous analogy. And what I'm talking about is the markets. Look at what the markets are doing or they're not doing, right? I mean, the reaction actually is pretty muted across the board. You look at what's happening with oil, you look at what's happening with US futures, you look at what's happening in Asia. And of course, I mean, so many people were sending these images of of the Israeli market, which was higher, Middle Eastern markets, which trade on Sunday, which were higher as well. So, I mean, and I think that's proved to be largely on the ball. Markets are worried, but are they panicking? Are they throwing a tantrum? Absolutely not. And I think we should just look at the GIF Nifty straight up as well, which will give you a sense of what we are doing. And it'll give you, I think it's a 100-point cut the last I checked. The point is, 35-point cut is what we have. So which is nothing, right? Implied open is 125 lower. Yeah, okay. So it's like a regular start. And that's essentially what I'm going to take off from. So just to kind of sort of rewind the clock back and take you through the highlights. So early Sunday morning, that is yesterday morning, US conducted airstrikes on 3 Iranian nuclear sites. And, unless you've got your head buried under the sand, I mean, you pretty much know what's happened, right? The big question, the big unknown in that sense is, was the US strike successful? Because these were nuclear strikes. The stated objective is to hamper Iran's nuclear capabilities so that they're not able to make a bomb. Was the US strike successful? That's the big question, because if the answer to that is yes, everything changes. If the answer to that is no, everything changes again. So we don't know. Now, the US, of course, claims that Iran's nuclear capabilities are destroyed. And President Trump, I think, has put out a tweet again this morning, essentially saying that obliterated is the right word, because, and he's kind of sort of pointing to how they were absolutely on target, etc. But independent verification of the extent of the damage to these nuclear sites remains unavailable, at least right now. You also had Iran's Atomic Energy Organization, which is insisting that its national industry, it's referring to its nuclear industry, will persist. There are also concerns about one particular tranche, 400 kilos of 60% enriched uranium that Iran reported to the UN in terms of where this cache of uranium is, which is enriched up to the level of 60%. For a bomb, you need much higher levels. The IAEA head essentially believes that, and he said that this material has been moved by Iran before the strike, so it's not been really damaged. So this, I think, is this will determine, because it's important, because how will we know whether this is ended now? This is the only phase and this is ended, and we'll move on, even in terms of military strikes. And that's the off-ramp. If we are able to get determination from independent outside agencies or IEA, etc., that the nuclear capabilities have actually been completely hampered and they're no position to conduct these enrichment, etc., then that's the off-ramp. Otherwise, you basically are in a bit of a state of indecision. Russia and China have condemned the strikes against Iran, but importantly have not offered any military support. So that is the other thing to watch. Strait of Hormuz, right? I mean, when this started a week and a half back, we put out that piece. Risk of closure, of course, is high. Iran's parliament is backing closing the Strait of Hormuz. But the actual decision, the power lies with Iran's National Security Council. In that sense, no decision has been taken. U.S. has called on China. The Secretary of State Marco Rubio has called on China. China is the largest buyer of Iranian oil in Asia to prevent Iran from closing the Strait of Hormuz. So, I mean, we'll see how this one goes. But broadly, if you think about this, I mean, and we put this out back then as well, closing the strait hurts, Iran's sort of closest economic partner, which is China. It hurts Iran because oil is the biggest source of foreign exchange. And it, of course, hurts other Gulf countries, which are Iran's neighbors, because a lot of their oil passes through this narrow strait as well. So we'll see if there is disruption. But, I mean, I would imagine if there is any disruption, I mean, there are U.S. aircraft carriers and there are, enough sort of war machinery around to ensure that the closure is not for long. It's temporary disruption in that sense. Just to tie in the levels here, the Nifty, of course, rallied sharply on Friday. The last hour was pretty spectacular. So 300 points higher. There was that MSCI rebal here in India. There was also the MSCI World expiry, which happened. And I think a lot of the last hour action was related to that. But anyway, we went past the high of 24,982. We also, took out some important near-term levels. The resistance now stands at 25,222, about 100 points away from where we left off on Friday. Support stands at the 20-hourly average, which is 24,863. For the Nifty Bank, we broke above 56,067, which is the recent high. We reached the 61.8% retracement of the shortfall we had, which is 56,324. We left off almost exactly at 56,324 on Friday. Support here for the Nifty stands at 55,846, which is again the 20-hourly moving average, simple moving average. So lots to track here in terms of geopolitics, markets. But as I began by saying, I mean, the market reaction is pretty muted and is quite telling as well. Surabhi.
You know, folks, I was just looking at a BBC report talking about protests around the world against the U.S. strikes. Not that it's ever stopped Mr. Trump, but from Athens to Paris to Tokyo to the Philippines to here, in India and parts of West Bengal to, multiple places to, of course, New York. Lots of protests against the American action, but then the action goes on regardless. Let's take a look at what Asian markets are doing. Like Prashant mentioned, there's no shock and awe kind of a reaction coming through. Markets are down between 0.5% to 1%. It could have been any day. That's what we have right now. And crude, after spiking to over $79 to the barrel, has actually climbed down from the initial spike itself. Last I checked, it was 78 plus, 78.52 thereabouts. So what was a over 3% spike has now cooled off to just about 2%. So markets being very measured in their reaction, at least for now. US futures are down between 0.4% to 0.5%. Again, it could have been any given day. The critical question that markets are asking is this it? Is this over? Can we now move on? There's no clear answer, but here's what we know. The Iranian ambassador to the UN, the UN had an emergency meeting yesterday. He said that the U.S. is waging a war against, quote-unquote, fabricated and absurd pretexts, said that Iran reserves the right to defend itself against blatant U.S. aggression. Now, all eyes on Iran to see what shape and form their retaliation, if any, will take. Of course, Trump himself has gone on social media, even acknowledging the possibility of regime change. He goes on to say, and I quote, that it's not politically correct to use the term regime change, but if the current Iranian regime is unable to make Iran great again, why wouldn't there be a regime change? So we don't know if it's over. The rhetoric is still very, very high. The U.S. Defense Secretary Pete Hegseth said that any retaliation by Iran, of course, would be met with force far greater, quote-unquote, far greater than what has been witnessed. So we don't know whether this is indeed it. But that's the big question for the markets. The markets want to believe this is it and no further. Let's talk about the flows. Because of the index adjustment and a couple of the block trades that happened, we've got a big FII net buying number coming in, almost 8,000 crores of net buying on Friday. And that's what had powered the indices. And the Nifty itself had come back to the top of the trading range, which was around 25,100. Domestic institutions were on the sell side, sold off cash stocks worth about 3,000 crores. Let's see how that plays out today. Now, aside of all the geopolitics and the global headlines, I'll watch out for the IT space because A, it's anyway, perceived safe haven. And B, we have a mixed sort of outlook from Accenture coming in. The results, the quoted results for Q3 were actually slightly better than estimates. They've also increased the guidance. Increase as in narrowed the guidance by increasing the lower band of the guidance from 5 to 7%. Now they're talking about 6 to 7% growth. That's good. But then the bookings have been fairly soft and they continue to be sort of lackluster. And let's see, the commentary is still a little cautious, but overall better than estimates is what we have on Accenture. So let's watch for IT. Small finance banks are going to be more about that because the RBI regulations have come in. They have reduced the priority sector, lending mandate from what was 75% earlier to, in effect, 60% now. So there's more cushion and more flexibility for small finance banks. So let's watch for these stocks. And finally, there's, if you go by it, the devil is always in the detail. There's a silver lining in the macro data that we got on Friday. The 8 core sector data otherwise is at 9-month low. The growth is barely anything, 0.7%. But within that, look at steel, look at cement. Month on month, the growth is very, very strong. Steel production 6.7% versus 4.4%. Cement production at 9.2%. And this is despite the fact that we're just getting into the monsoon period. So pre-monsoon, steel, cement looking good. I'll watch out for these stocks as well. Nigel.
Well, just a word on that core sector data. Last year, we had a general election. So that growth has come on a lower base. But nonetheless, it's a decent number coming in both for the steel as well as the cement industry. But in Friday's trading session, it was a rather good one. And it came on very, very large volumes. 2 factors played out. One was the volumes were much higher. That's the gross volumes were higher because of the FTSE rejig that we saw. And that's why institutional participation was much higher. And there were signs of short covering both on the futures as well as on the options data. Let's get a little bit into further detail on that front itself. The FI, actually, if you look at it, on index futures, they added pretty much longs as well as shorts on index futures. However, on stock futures, you saw there was a bit of a short covering bounce that played out because there was big covering out here and there was long addition as well. So that's telling you there was a swing factor of close to around 77,000 contracts on the stock futures side of things. So that was a bit of a short covering bounce that played out on stock futures itself. The positioning as of now, the FIs continue to remain net short with close to around 76% of their positions on the short side itself. But I was telling you that even in the option side, there was a bit of a short covering bounce that played out because those call writers were getting very, very confident. They were forced to cover. The 24,800 call, that's been seeing a lot of open interest build up. Big unwinding is what we saw out there. So those called writers, they had to cover their positions. The 24,900 put, though, continue to see some addition, which is telling you the 24,800 mark, that's a crucial level that you're looking at just in the near term. Which brings us to the levels that we're looking at. The 20 DMA, by the end of today, you'll want to see both the Nifty and the Nifty Bank end as close as possible to around this 20 DMA. For the Nifty, you won't want it to break it because the next reference point is another 2% cut from here on, which is the 50 DMA, both on the Nifty as well as on the Nifty Bank. So we'll keep an eye out on both those 2 levels. So the Nifty Bank will have to play a role today. Yet again, it'll have to bounce back and it'll have to fight for the bulls because that, in fact, could be the pocket that holds strong today. Stocks that I'm looking at, a few stocks have come out of the F&O band, so I'll keep an eye out on all these 3 names. And Reliance Industries, that's an index by itself, right? Even in Friday's trading session, it was rock solid. The last 6 months, actually, it's been an outperformer. Over the last 1 year, it's been a relative underperformer. But that's the one that I'll be tracking. Reliance Industries and the Nifty Bank, both those 2 could hold up for the bulls.
All right, Nigel, thanks very much for that. So that's essentially the overview that we are looking at the market with.